Hi, this is Mike Rankin with Relational Intelligence, and we're going to talk about what happens when you turn 26. And that's a big deal now because for most of you that are turning 26, it means that you're getting maybe kicked off of your parents' plan, if that's the plan, the health insurance plan that you're on. And there's a lot of things to be aware of when you turn 26. And there's four critical things that we think that are really important to keep in mind. One is find out exactly when your coverage ends. So typically it's the day you turn 26, then you're going to be newly eligible for a new plan. So talk to your human resources department, find out about the new plan information and when you can enroll, and certainly don't miss the deadline as you're evaluating your coverage options. So to find out when coverage ends, you may have to ask your parents or parent to talk to their HR department and find out exactly when the coverage is going to end. So for example, if your birthday is on April 12th, usually like 99% of the time, coverage runs through the end of the month. But there are some exceptions where it actually ends on that day. So really important to know that. That's like number one. So in this example where birthday is on April 12th, coverage goes through to May 1st, you're going to be newly eligible for your new plan on May 1. So that's what you need to let your HR department know. Then as you're going through your benefit options, you're looking, usually most companies offer more than one plan. In this example, we've got three options, a PPO, 1, 2, and then an HSA or a health savings account. What I like to do is kind of two scenarios, and you can really do this real quick, back of the envelope kind of a thing. Take the annual premium they're going to charge you, then add it to the deductible. And that's one scenario. The second is take the annual premium and then add it to what they call the out-of-pocket maximum. That's the most that you're going to pay in a year if you have a really big claim. And then you can kind of evaluate, okay, well, scenario one, these plans look like this. If I use the health plan just a little bit, and then here's scenario two, where if I use it a lot, this is what it's going to look like. The other really important thing to keep in mind is if the employer is contributing to the HSA or the health savings account, and by the way, we have another Relational Intelligence installment on HSAs where we go into more detail there, so check that out. But do keep in mind that this health savings account is really a great benefit, especially if you're young and don't use a lot of health insurance. But sometimes it can even be great even if you are using a lot of health insurance and have a lot of claims. So really need to look at that. And if you need help, you have a lot of resources. Human resources, insurance advisors, us at Relational Advisors, we're happy to help. Send us a note. We'll help you out. And then also there are online insurance calculators. The most important thing is don't miss the deadline, because if you miss the deadline, then you've got to wait until next year's open enrollment, and you might have to go to the individual market and then pay out of pocket for premiums where you're not getting your employer subsidy. So that's it for this take on Relational Intelligence, and let us know if you have any questions. Thanks.